Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's webinar, which is themed on enhancing auditors' professional skepticism. As we all are aware that the topic is very relevant for all our auditors, so that is why AASB is conducting this webinar once again, that is on professional skepticism. And we are having with us very two learned speaker and moderator with us, C. Aleem Milani ji and C. Kapil Kedar ji. So on behalf of AASB of ICI, I extend my warm welcome to both the speaker as well as moderator. Welcome Kapil ji, welcome Aleem ji on this AASB Zoom platform, this webinar. So without wasting much more time, I request today's moderator, Sri Kapil Kedar ji, please start the proceedings of today's webinar. Over to you, Kapil sir, please.
Thank you, Anil ji. And thanks. Hi, good afternoon, everyone. And I'm delighted to introduce Aleem Milani, who is the speaker for today's session. And just a brief introduction about Aleem is that Aleem has more than 16 years of experience in providing audit and assurance services to the clients. And he's also quite active in terms of providing quality assurance and risk management services for the assurance and audit clients. And he has been quite active in imparting various training sessions on pan-India basis on implementation of audit tools, auditing standards, IGAP, IFRS, etc. And Aleem has also been helpful in terms of standardization and circulation of audit and reviews and certification and work formats, checklists, etc. And he is also providing expert opinion to clients on various matters related to assurance services for capital market transactions, including IPOs and QIP. And he has been past member of Corporate Law and Allied Committee of WIRC. And presently, Aleem is proprietor of Milani and Associates. And today's topic is very important. What Aleem is about to cover, it is professional skepticism, which is very relevant for all the members in practice and corporates and all audit firms at large. And professional skepticism is something that an auditor should plan and perform an audit with the professional skepticism in mind. And it is also very important to continuously to evaluate the need of having this professional skepticism at the back of his mind whenever an auditor discharges the function of auditing an entity or any other professional services. And professional skepticism includes that the auditor is alert to the audit evidences that contradicts other evidences which he has obtained during the course of audit. Also, the conditions that may indicate the possibility of fraud, that is where the professional skepticism should also be applied. And also looking at the unusual transactions if that is happening in the client or the company he is auditing. So this is what a professional skepticism is, and maintaining professional skepticism throughout the audit is also very necessary, just to avoid any risk of related to unusual transactions or excessive cash transactions or management override of controls or getting an evidence which is contradictory with other evidences he has obtained, or while relying on the external confirmation. So today's topic is actually very interesting, relevant for all of us. And without taking more time of Aleem, I'll request Aleem to start with this today's session of professional skepticism. Thank you. Over to you, Aleem.
Thank you so much, sir. You have in brief covered the session, the gist of it. But it will be interesting to see that we are all, I mean, after having cleared CA exam and the way we have been thinking since the day we get into the course is always the questioning mind, and that is the topic today. So actually it is a very, one would say it is a very general topic, but and we do it naturally. We are skeptical naturally. CAs are definitely skeptical naturally, but we need to now understand how to apply it in the audit process and how to document it. That is the most important part of this session today, and that's what we need to to find within us. Okay, I can hear some echoing.
Yeah, there is some noise at some of the. It's fine now. I think Alim, it's fine. You can continue, please.
Okay. Hello? Yeah. All right. I'm audible, right? Now there's no echoing. Yes. Okay. If someone can just confirm if the presentation is visible on the screen.
Yes.
Okay. I'll just take a minute to introduce where my knowledge has come on skepticism and why audit is a topic close to my heart. So ever since I've done through my articleship and through my entire career, I have been in the audit industry, and I have worked with multinational large firms, and I have seen international practices as well. So um, I had the good opportunity of being part of the quality and risk teams in these firms and developing the various uh, audit procedures, steps, the audit methodology on how to audit, how to question, and how to obviously document, which is the most important part of our auditing profession, because what is not documented is not done, as it is very uh, generally said and absolutely true. Because when we see today the regulators come for an inspection, they are not going to ask you to sit next to them and explain how did you do the audit. They would like to see the work paper to speak for itself. So while we are the best auditors, Indian chartered accountants are some of the best in the world, and there is nothing to hide there. Rather, it is the whole world has appreciated us. But the part where we are slightly at back is the documentation, because the kind of critical thinking that we do at our clients needs to now come out in the documents, and it's a very difficult thing. It's not that easy, because we have hundreds of thoughts in our mind all the time when we audit a particular area, but not all those thoughts come down onto the file. And that's the only thing. Rather, we over audit. It's very commonly said Indian CAs are over auditing, because first our client gives us that kind of access that you come, you see everything. We ask him 100 questions. We will ask him his plans. We will ask him his uh, his future. We will ask him about what happened during the year. Indians talk a lot, actually, if you see globally, and that's why we do a lot of questioning, a lot of discussions, and which is not the case I've seen outside the country. But so we are being more skeptical, rather, but we don't bring that onto the file. So today's topic is understanding how to understand the sequence of being skeptical, how to understand the science, and then finally how to document it. This is what I would like to cover today. While we go through the steps, we'll go through the presentation, which is elaborate. I'll try to talk about practical examples where you can relate, and then understand the psychology involved in being skeptical, and also the sequence that needs to be followed, and then the sequence that needs to be documented one by one. Because it's a simple thought, being skeptical, but it is a little bit complicated process. But once we get into the routine of being skeptical and documenting, I'm sure it is very easy. It is not a difficult problem at all. Okay, so let's first understand what is being skeptical. Now, when we start from there, later I will also touch upon standard of auditing 200, which is the most important standard for us, because it lays the foundation of audit, and for us to be considering everything that we should as a professional. Then we will talk about the concept of judgment, because skepticism and judgment are closely related. And before making a judgment, we need to be skeptical. Rest are all audit evidence in front of us, but being where we have judgments involved, we need to be more skeptical. And then I will take you to the challenges that we face in being skeptical. This is something, when you will see, it is very interesting that how when going to a client there are so many challenges. See, theoretically we understand what is being skeptical, how to question the client, how to get into his systems or get into his audit, how to audit his stuff. But there are so many challenges in between us doing that and reaching there because sometimes there is no time. Sometimes juniors do not go that deep. Sometimes juniors do not communicate the point in time to the senior, so that the senior can go inside, go into be further skeptical. So we will see those challenges, and I would like to take you to talk of how to overcome those challenges, which is very interesting and I think would apply in every firm that does audit. Simple solutions, but very effective, very effective. And I have learned these steps over the span of my career, and I have been applying them in all the firms that I have been working with. So, and definitely, I have had people come back and say, yes, these small things that you explained helped us to get into the client and become more skeptical and get the audit evidence in time, appropriate and in time, for us to take the decisions on the audit report. So that will be interesting. And in the end, obviously, we will talk about the future of auditing a little bit on how being skeptical is so important today, especially with all inspections happening. We have the peer review, we have the QRB, we have a NAFRA. So all of them are asking the single question: where is your skepticism? Are you being skeptical enough? And if yes, where is it documented? Because we are being skeptical enough, but the point that needs to speak is the file. Is the skepticism seen in the file? That's the ultimate question, and they are asking, and we need to now gear up to give them that answer that yes, we are doing it, and we are definitely being skeptical on our plan. Okay, now that's enough for the introduction. Let's start with the topic first and the meaning of the word skeptical first, which is, I think, sir already explained that it means being skeptical, or it means to inquire or to reflect. That means anything, anything that you go and ask, or anything that comes to you, you need to first reflect and inquire: is it appropriate or not? You need to seek further information by questioning. So that is basically what being skeptical is all about. What we need to understand now, that is, being skeptical is more an attitude and a mindset. Sorry. So most of us are what trained as auditors. We all have written us, as I said, it's the attitude of an auditor has to be skeptical. He walks into a room where the client is sitting, your skepticism cap should be on. Whatever he is saying, whatever document he is giving, your mind must keep questioning, inquiring, and that should be your attitude. That should be the way you work. Then that's actually the identity of an auditor. We all have the temptation to ask, what's the basis of that document? How was the calculation done? We prod and poke around, and we make sure that whatever they are, they become instinctive. See, that's professional skepticism in a nutshell. I mean, the one I already explained earlier. We all have it in us. We do it. All we have to now understand is that when you take on the auditor role, uh, you must have that skepticism cap on all the time. Now let's look at how to break it up and how to do it. Now, I mean, my father was also a chartered accountant, and he never had that kind of uh, the need for skepticism was not that high in that era when he passed his CA. But today's time, it looks very important to be skeptical, because at that time, uh, bookkeeping was simple. Uh, there were no complex judgments or arrangements. We never had such complex financial instruments. We never had elaborate disclosures to be given. So the need for an auditor, because of the amount of disclosures and checking that he had to do was less, the need to be skeptical was also a little less. They were skeptical in their own way, which was mainly for errors and fraud. Today, we are looking at skepticism being thrown at us because there is so much uncertainty in the world, where India is now a growing country, almost challenging world economies. We are now one of the best economies in the world. And that is the positive, which also needs us to be skeptical, because we may be overstating things, And when faced with economic uncertainty, such as in 2008, the COVID-19 that hit us, I'm sure you're aware, ICA had released lots of good material on how to become skeptical during the COVID-19 because going concern assessments were being challenged like left, right, and center. We didn't know what was going to be the future. Impairments started shooting up, companies started shutting down, and reportings of going concerns were going up. At the same time, people were not aware what to do for inventory verification, what to do for the surprise count checks because uh, there was no physical movement, right? We needed to audit through the computer. Many firms were working through remote auditing setups, and that needed us to be more skeptical because we don't have the client in front of us to question what exactly happened in the company, or we have less time, or we could not read his body language. So there was a different set of challenges. And at that time, we understood that for us to be skeptical was even more important because we were not we were not auditing in the same way that we were doing earlier. But thanks to ICA that released a lot of good material at that time that helped a lot of firms overcome these challenges in being skeptical. Um, so another areas means we all know the difficult audit areas are the ones where we are definitely questioned on our skepticism. So fair value assessments, related party transactions, going concern assessments. I think these are a lot of judgments involved, and these are places where always an auditor is questioned: were you skeptical? Did you ask what is the fair value? Why this method? Why this formula? Why this rate? Uh, you know, um, so replying to that question being asked by the regulator is a little tricky if you have not documented it. So it would show lack of your skepticism just because you have not properly documented the reasons you took to rely on them. So we will talk more about this a little later. So let's move forward and let's now jump to what exactly we need to do. So I know I'll move a little faster since I'm explaining. The much of the stuff is written in presentation, but I prefer to keep this more interactive, where I can keep talking to you and explaining to you the importance of skepticism. Okay, now our audit quality, of course, as I said, regulators are directly linking professor skepticism with the audit quality. So if they're saying you are not skeptical, that means your quality was poor. This has become a very big challenge for auditors because all of a sudden our grading of audit quality is down because of one aspect of skepticism not being done or not being documented, as I said. So what is skepticism? So you need to apply an appropriate level of skepticism to enhance the likelihood that the auditor will understand your industry, the line of business, the business process, any nuances that the company is different from others. So it naturally occurs to the auditor to ask these questions that may otherwise go unasked. So this will enable the auditor to provide the insights and the value-added services also as an auditor. So going skeptical, you need further knowledge about the client, and that only will make you shine as a value-added service as an auditor. So skepticism helps us in creating that right image also to the client that look, we are here not just to tick and tie, we are here to provide valuable insights on your disclosures, on your valuation methods. Because we do an independent check, we will ask all the questions, and that client also feels that okay, this is great. My auditor is asking so many questions. I have one more level of person or an expert looking at my books. So that becomes the greatest value add as an auditor that we can give. Okay. As I said, SA 200 is the basic standard that talks about professional skepticism. Of course, it is a general statement put out there, but it expands across all the auditing standards that the auditor has to follow. So let's take a quick look at what SA 200 says. Now, SA 200 says that the auditor should exercise professional judgment and maintain professional skepticism throughout the planning and the performance of the audit. So at both stages, at planning also you need to be skeptical, and through the performance of the audit also you need to be skeptical. Okay. What is the professional skepticism? It's an attitude, as I said, that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to error or fraud. Okay. So any conditions that could have a misstatement due to error or fraud, which is our basic premise of audit, and a critical assessment of the audit evidence. This is professional skepticism from standards, auditing standards point of view. So auditor should plan and perform the audit with a professional skepticism, recognizing that circumstances may exist that cause the financial statement to be materially misstated. So in a way, we are saying you to be biased. You have to plan your audit and perform the audit with the understanding that this financial statement can be misstated. That's the reason you are being alert throughout the audit for any contradictory evidence, any lack of evidence, any unusual transactions, that could cause the financial statement to be misstated. So it's an attitude and it's a mindset. And let me tell you, it's also at the planning stage. That means when the auditor is planning the audit, at that time, he needs to think very clearly about the client, ask the right questions, understand the business, understand the setup, understand the books, and then plan the audit. So it starts in the beginning, not when I will go to the client, then I will become skeptical. Everything is the same as last year. It should not be the attitude. Everything is same as last year. I will go to the audit client, and then I will ask the questions. So we already covered the concept, I think, sufficiently. Now let's talk about where to apply professional skepticism. Where exactly we need to apply this. So first, whatever audit evidence that comes to us, we have to be alert that it should not contradict the other audit evidence. Okay. This is the first and the easiest place to be skeptical. Whatever audit evidence the client is giving you, relate it with any other evidence that you have received, and then you will know whether it is contradictory. Look for that contradiction. Okay. I'll give you an example. Let's say a client has done an impairment. Okay. Under AS 28. He has, let's say, done the calculation of the cash generating unit. He has used a certain discounting factor, and he's saying that, look, my business is not doing well. I need to impair my asset, and this is the impairment. Okay. So great. Very good. Let's say now you move to another area. From assets, now you have gone to, let's say, the deferred tax working. Now, the client wants to recognize the deferred tax asset. Okay. He wants to recognize it. In that working, okay, he is using a different rate. Okay. He is using a different rate to show that the company will be profitable as in the future. And he's trying to show a very bright picture of the company, that company will be profitable, and I need to recognize the deferred tax asset. Okay. Now, so we are looking at two sets of projections. One projection where he's saying that company is not doing well, I need to impair my asset. He wants to claim, let's say, he doesn't want to pay tax, let's say. And the other side, he's made a deferred tax working, and he's saying that I want to recognize the deferred tax asset. Now, you must compare this to evidence to see that the assumptions that he is using in both should be the same. So, because he's trying to push what he wants, right? And we need to look whether it is making logical sense, because you cannot have a different assumption in both. I can add one more to this, a going concern assessment. Even the going concern assessment will have some projections which he gives you. Now, he cannot one side say that company is not doing well, my assets, I need to be impaired. And other side say that I don't have any going concern issue, my company is going to do very well. So when you look at this corroborating evidence, you will realize that there may be some difference and contradiction. So be skeptical of this evidence that you have. So all the evidence on the file should correlate and you should see whether there is any contradiction. This is the very easy place to being skeptical. Okay. Now, the next one. Information that brings into question the reliability of the document and the responses to the inquiries to be used as an audit evidence. Now, we all know that audit evidence has two parts. One is the document itself that he gives, but even inquiry is an audit procedure. You can inquire with anybody in the organization in charge of that particular area. You can inquire with senior management. You can inquire with CEO, CFO. You can inquire with the board of directors also. Use your inquiry with them. Keep talking to them and corroborate with the document receipt. You will very often find that there is a mismatch. And I've seen this multiple times. Because when they talk freely to you, they are saying the truth. Or they are saying what, or the board is saying what they believe is truth and what they understand. And usually that is the right thing because they are running the company. But it sometimes happens that the evidence being given to you, the documents being given to you are not in line with what they are saying. So you must be alert for this. If you have spoken to a CFO, let's take an example. You are speaking to someone in the production team and he is very confident and very boasting about how well his team has done this year, and they have started 3 new factories in India. Okay. And when you go to the books of accounts, or let's say the registers, the production records, you see that there is production from only two factories listed there. And very often happens because the financial team sometimes tries to hide certain transactions. They don't want it to come into the books. So they have taken a decision with a lot of thought to plan that in a way that the production that started this year in factory number 3 should not enter the books this year. We'll put it next year. But the production manager has no idea that these 3 factories are part of the same company, or they are part of different companies or different time. He just knows he had a job to start the factories and he started 3. So it can be that maybe that 3rd factory is a part of a sister company. Okay. And another situation may be that you may find that the production record of 3 companies is in the books. Okay. Or vice versa. So speaking with non-financial people, you get certain response, and documents are normally linked to financial matters. This is a different response, and that makes you skeptical. That will bring out the evidence, or it will rather highlight you as an auditor being skeptical, where you recognize that there is some mismatch. There is something wrong here, and you can find a possible error, or it can definitely be a fraudulent intention of the management also to hide entries, right? So skepticism helps us there. So keep talking to people, document that talking, because inquiry can also be evidence. Okay. So you can write the date, the time of the meeting, the people involved, and whatever response you got, that can be noted by you in a work paper and put on the file. And it must corroborate with the document you received. Okay. So this is one place where you should be skeptical. As I said, conditions that may indicate a possible fraud, we need to be skeptical there 100%. And any circumstances that suggest the need for the audit procedure in addition to those required by essays. Now, we'll come to that. Let me talk about some practical parts where you need to become skeptical for indication of fraud. Okay, very important, very simple also. Just you need to be alert. Now, let's talk about some examples. There's a, let's say, delays in, let's say, settlement of the advances. Okay, company has a lot of advances and there are huge delays. Okay, there you could question why, because as a policy, company need to settle the advance, but they're not being settled. There could be someone in the middle doing fraud there. Okay, where funds have been diverted, but those advances are still showing up in the books. You could have lack of documentation in huge expenses. Okay, so it's possible that sometimes company does large transactions like big loans or big orders, but when you see the documents, you see a very small set of documents, couple of pages. Um, like I once saw a client where he'd done a 60 crore transaction. Okay, he gave me just two documents and said, "This is the evidence." I, I was shocked of my life. Said, "You have spent 60 crores and you're giving me two pages." Okay. And I could make out that paper, those pages were an A4 print, A4 size paper, letterhead printed on A4, letter paper. It immediately made me, made me conscious that, okay, something is wrong. He's spending 60 crores, he gave me two pieces of paper in my hand. This is not possible at all. Okay. And then he says, it will take time. I need to pull out the records. I'm having difficulty finding the records. No, come on. You spend 60 crores. You can't find your documents. It's very, very likely that he is producing the documents and giving it to you. Or he has hit a bottleneck. He's not now able to produce the documents. So these things, you must wake up. Okay, something is wrong. There is a possible indication of fraud. This is being skeptical at the real intention of skepticism is this. This is the most important place where you need to get skeptical. Okay, fraud. Because that's something that client is hiding. Others are errors. You will find it today or tomorrow. But fraud is very difficult to find. So skepticism, the real purpose of skepticism is to find that fraud which management is hiding and not putting in the books. I think that's the most important reason regulators, standards are saying be skeptical. Okay. Now let's come to the other part. Circumstances such as need for audit procedure in addition to those required by SAs. So this is very simple. SAs are very clear that you need to do audit, risk assessment, everything. But there are certain items where you need to be skeptical. It is something that you don't need an essay to tell you be skeptical. For example, essay will say, okay, document your evidence for going concern, document these matters. But there you need to take a call. Okay, I've done 4 procedures. You can sit back and decide. I think I should do 2 more. Because this is a very sensitive area. Let's say COVID-19 has come. Not sure how client is going to report, what is going to happen. Every year I was doing 3 procedures. I was happy. This year I will do 2 more. This is a situation where SA is not requiring you to do more, but because of the circumstances, you have decided to do few more. This is where being skeptical also comes in. You increase your audit procedures because you feel I need to check this area. It is something critical, and this situation is such that that area needs that attention. I can very easily talk about these areas. Going concern in COVID-19 times. This like you can say the bank guarantees, or let's say branches in foreign countries, especially during war crisis, where trade embargoes are installed by US. There is a ban by certain companies like Russia. If clients have branches in Russia, we need to be very skeptical because the country suddenly disowns the transactions with India or US. So you need to do more procedure there to really know that what is the value of the assets in that country. Is it really possible to recover that kind of money? Do we need to impair all debtors with Russian country, for example, because of the war situation that happened? These are things where we need to, by ourselves, think that, okay, we need to do more procedures here just because of the situation. Okay. Now I'll move forward to how do we go about professing skepticism? As I overall said, this is for why do we need to be skeptical? One, reduce the risk of overlooking the unusual circumstances, overgeneralizing on the audit observation, and using the inappropriate assumptions in determining the audit procedures. So we need to reduce the risk of basically missing out things. That's why we need to be skeptical in a way. I'll move forward, which is the more important part. How to be skeptical. Now, this is the most important thing. As I said earlier, a critical assessment of the audit evidence. Look for any unusual patterns, look for differences from last year, look what competitors are doing, look what this industry is talking about, and what is your evidence saying. So this is the assessment of the audit evidence. Here we need to apply our own skill to look for, very critically look at the audit evidence. That does it make real sense? Okay, we'll come to this when we see professional judgment, how to go about professional judgment. We need to question the contradictory audit evidence. As I said, anywhere you find contradiction, you need to question the reliability of the documents. You need to see responses to inquiries and other information obtained from management and the TCWG. Very important. It's many times a different thing. What people are saying lower in the organization and what people are saying at the top of the organization, there is always a huge mismatch. Because the people at the top understand the business better. The people at the bottom only know their job and document what they are told to do. So it's very important that that conversation matches. Okay. And consider sufficiency and adequacy of the audit evidence in the light of the circumstances. As I said, depending on economic crisis, COVID-19, any impact, anything which keeps going on nowadays, you have to consider the audit evidence. Like for example, very single document shown as evidence for a material transaction. This is a red flag for sure. And you all should have a red flag when you see something like this. So one I explained to you is the process of being skeptical as you see the evidence, as you go through inquiries. There is one question a lot of people have always asked me, and in several trainings that I've done. Being skeptical, is it doubting the information? So in doubting, you become prejudiced. I have to check everything now. Okay. And the other one angle is, what about the past experience? Should we consider the past experience or not consider the past experience when doing the current year audit? So let's take up both of these points. Doubting the information. As per standards of auditing, you can go about doing your steps of audit and you can accept all the records and documents unless you have a reason to believe to the contrary, right? We have a very famous saying that auditor is a watchdog, not a bloodhound, right? We've studied that. So that's what this exactly says. So plan your audit. Let's say the area is creditors or debtors. Let us easy to understand. Do your audit procedures, go forward. But if you have any reason when you are evaluating those documents or evidence, any reason comes that you feel you can doubt the reliability of that information or there is any indication of fraud, that's it. Then your whole way of which you will do the audit of that area has to now change. That is the time you need to change. You need to document why it changed, why you are now doing more investigation, more procedures. We need to document the procedures as well. Then standard auditing says, investigate, modify the audit procedures or increase the audit procedures, then close the file, close that area. So it's very clear. Skeptical doesn't mean you always go and say there is a mistake here, I have to find it. No. You do your audit procedures with standard auditing as said. If you find a doubt, only then you have to become highly skeptical, investigate, do more procedures, and then close the area. Understood? So that's one thing you should be very clear of. Okay. The next part, past experience. Now, we don't want to be judgmental with anybody, right? We want to be independent, but you cannot ignore the past experience, no matter whatever, because if in past client has been dishonest, he has history of giving you, we all have faced it, wrong data. Okay, wrong data is easiest way for client to buy time. He gives us the wrong data. He knows he will spend 2 days in this. The auditor will spend 2 days, and he only will bring out the mistakes. So they go, take a chance. If the auditor catches it, fine. If he doesn't catch it, great. My intent of a fraud or not recording the transaction or overstating or understating that balance is fructified because auditor missed it. So they keep trying to push errors of, like, I would say it's a fraud, misstatements through us. Okay. Now, if we have experienced that this client is always giving us data with mistakes, or he's never openly saying that, you know, the mistakes, he never admits the mistakes, or he never talks about, enough information for us. We always have to ask him many questions, and he tries to take us round and round and never directly tells us, honestly, what is the problem in the company. If this experience is there in the past, then you definitely need to be more critical. Okay. You need to be more skeptical. You need a team on that audit that is more skeptical. Okay. And don't leave that audit area until you have, not less than persuasive audit evidence. Means you should be reasonably certain that this area is now fine. Then you can move forward. So past experience is very, very important. We should not ignore it. And that sets the first basis when you are planning the audit. As I said earlier, skepticism is when you are planning. Now, what was the experience last year? And now let's plan this year. So consider last year's file, consider last year's mistakes, look at last year's file, then you plan the current year audit. Okay. Yes, this is not, I know you will say independence. What happened to independence? This is not a question of independence. This is the question of rather being alert and aware of what you are going to deal with. And then in the audit, definitely you are independent. Okay. So a small distinction there, but definitely we should look at last. Okay. Okay. Now we'll look at some areas where we need to be skeptical. So lot said and done. There are certain areas where standards are saying to apply the skepticism, to document the skepticism, and to do a thorough job in these areas. At least these areas you have to be skeptical, because these areas are also where there is a lot of judgment being used, or there are a lot of chances of we say subjectivity, if you ask me. Okay. And where there is subjectivity, there is definitely a judgment involved. And where there is judgment involved, being objective is a little difficult, because there are not one right answer. There can be multiple right answers, but you have to choose one, right? For valuation techniques, estimates, these are the places where one has to apply more skepticism to get the right answer. Okay. Let's look at them. So when we talk about estimates, how we should not take it on face value. We should take all the estimates, ask the client for the background. How did he arrive at this estimate? So we're talking about method of depreciation. We're talking about um, um, the impairment. We're talking about valuation. We're talking about every place where he makes an estimate. You have to ask him, how did you make the estimate? What were your assumptions? And any indication is there of a possible management bias, where you can pick up that this was beneficial for the management. That is the reason he has taken this step to arrive at this estimate. This is somewhere where you need to be skeptical. Look for all management bias. Okay. We'll see it later also when we go ahead. Next is the related party transactions. Now, obviously, this is one area where, unless you know that that person is a related party, you cannot catch that error or fraud. So you need to be more skeptical here. So first you need to look at past related parties and the past financial statements. Then you should look at what are the transactions during the year that he has done with those parties. Why have they suddenly stopped, or why have they gone to other people, or why are there more transactions with other parties this year, or significantly number of transactions at below market prices. These kind of probings will reveal the related party relationships and the transactions. And first of all, when you go to client, you should not ask for related party list at the end of the audit. You should ask at the beginning. Provide your related party list first, and then get into looking at transactions with those parties. Because while he may show the list to you, there may be transactions which are missed in reporting. So this is the place where you need to really work on it for some time. When you are assured that all transactions have been found, all parties have been identified. Talk to client, talk to management, look at previous year, look at company law records. So look into the agreements, look at the pricing, look at unusual transactions, and you will definitely find comfort after being skeptical in this area. Okay, I'll go ahead now. Others is consideration of laws and regulations. So be alert for any non-compliance of laws and regulations, especially like Companies Act, RBI, FEMA. They may have huge penalties or even a cancellation of license to operate the business. So if you miss this kind of a violation, then the implication on the audit report is huge, which you could miss. Okay. And the financial statements, financial implication also can be so large that it may even impact the going concern. So look at all violations. Try to be aware that if he has violated, let's say Companies Act, if he has violated a few sections, it's possible that he has violated more sections, because that is the trend. Person wants to not look at following laws, then he tends to ignore more laws. So find out the number of non-compliances, document what is the implication of the non-compliances. Sometimes there are so many that company may face a notice of shutdown. So and that would directly impact your going concern. Okay, and I've seen this kind of situations. So we should be skeptical in this area. This is one area where many auditors don't look, is the non-compliance of laws. There could be laws we are aware of, and there could be other non-financial, non-commercial laws like environment or uh, other laws which are based out of more to do with uh, the business setup rather than the business itself. Okay. So environmental laws, uh, carbon credits, all that kind of areas also have an impact, some on some or very large penalties in certain industries. Okay. The other part where our tricky part of being skeptical is the user specialist, because we are not a specialist in that area, right? That is the reason the management, has gone and employed a specialist. So we need to do objective evaluation of the specialist, and there is the standard auditing is very clear on how to go about evaluating the, use of an expert. But we need to be very skeptical here, because why did he choose that expert? What is his background, capability? Is he well known in the market? Is he? Why has he taken the particular assumptions mentioned there? Has he properly explained the assumption? Has he properly applied it? So is the report adequate, or is just a single piece of paper? You should be a little bit, skeptical on these things, because you are going to now rely on that person's report. So you need to be skeptical uh, on whether you are really sure you to rely on his, report. Okay. The other parts, as I've already said, is impairment calculations, fair value measurement of the assets, in the going concern assessment. These are places where we definitely need to be skeptical. There is no questions asked here. It is something we have to do. Okay. And we should all equip ourselves with enough knowledge to do this. Now, so I'll talk about that in some time. Just give me a minute. Now, I think I spoke enough about being skeptical. Now we come to the most important part of where to apply skepticism, because it is a process called judgment. Judgment is a process, simple word said, but actually it has a step. In the profession of accounting and auditing, judgments need to be critically evaluated, skeptically evaluated, but you need certain background before you go into, doing a judgment. So what is this judgment and what are we talking about? As for the standards, the application of the relevant training, knowledge, experience within the context provided by auditing, accounting, and the ethical standards in making an informed decision about the course of action that are appropriate in the circumstances of the audit engagement. Okay. Let me break that up to you. You have to apply your training, your knowledge, and your experience first. So you need a base, okay, before you get into judgment of all the auditing standards, accounting standards, ethical standards. When you make a decision on the course of action that you are going to take or the client has taken in the audit and evaluate it and make a final decision whether this judgment is right or wrong. Okay, let's look at what are the steps or what does it require to do a proper judgment in the field of auditing, and how do you document this? So let's take a step back to understand what are we going towards here. Okay, so I would it would be best if I can explain this with an example. Okay, in the field of audit, where we all are, we have certain amount of knowledge, we have a certain amount of knowledge, we have certain amount of skill. And now when we go to the audit place, to the client, we need to apply that knowledge and skill to check the client's, let's say, evidence. And we need to finally make a conclusion that what the client has done is appropriate, is not misstated, and finally, that outcome that we give, the final conclusion, the judgment that we take on it, that it is appropriate and adequate, and it is not misstated, or it is misstated, okay, will form the basis of our audit report. So there is a link. So from audit report will be based on our judgment. The judgment is based on our application of mind, and that is based on, so when I say our application, means the firm's application of its knowledge to evaluate those matters and give the judgment. And for that to happen properly, adequately, where no regulator or anyone can challenge that you have not done a good job, the whole professional judgment working needs certain clear understanding of what is the basis and the criteria to do a judgment. Okay. So a little complicated what I said. Now let's get into how to do the judgment. Okay, very simple. Let's make it very simple language. You need to be clear first with your steps. So if you're going, let's take an example. We are going to check, what should we take as an example? Okay, we are now going, let's say we have to make a judgment on an estimate. Okay, we are making a judgment on an estimate made by the client. Let's say an impairment estimate. Okay, okay. Or it could be an estimate for the valuation of a financial instrument. So that's also an easier, that's also a good example. So client has made estimate, he made a call, he has done something and decided that this is my impairment, or he has said this is my valuation of the financial instrument, and this is going to be in my books. Now, as auditors, we are now going to audit that. Okay. And as I told you, it is a subjective thing. Valuation is a subjective thing. We need to apply judgment whether he has done a proper job, right? So what do we need to do? first, when as an audit team, you are going to do the audit, be clear what you are going to check there. You are going to check, let's say, the estimate. Okay, so be clear. You should know your objective. At the end, after all the inquiries, discussions, evidence, everything, finally you need to conclude. Let's say that he has applied, the valuation technique properly, or we want comfort on the valuation of, let's say, the assets for the impairment or for the financial instrument. Okay, be clear. Then you identify alternatives. What are the different alternatives available for this particular area, like the estimate, or you must know the alternatives. So you will analyze which is the best one. You check all the alternatives to check that information. Then you will analyze it. Then you will conclude that this estimate that he did, let's say the technique that he used, market technique or similar market technique for the valuation, is appropriate. You will conclude. After concluding also, you do not stop, because we as auditors go so deep. We are so tired finally. We just finish the area and go away. No, take a step back again, reassess in the context of the business, that is this the right way to value that instrument, or is this the right way to value that asset? It will many times appear to you and you will realize that in this business, we are doing this methodology of valuation. It is wrong. You can look at competition. You can look at so many uh, reports, industry reports. You can look at international practice. So when you take a step back and you reassess to see whether it is appropriate, looking at the business, the industries, the competitors, that is also being skeptical. You have to do that last step. Then you should relax that, okay, I have been skeptical, I have put proper judgment, and my judgment process is complete. So now in this process, these are the steps. What are the skills that you need? You should be willing to learn. Okay. It's very especially important for us auditors that we should be willing to learn, because market is dynamic. We keep getting new clients, new industries. Industries are also evolving very fast. Laws are changing. So we should have a learning mindset. We should keep learning. As we go to the client, we get a document, we should be learning. Okay. If you cannot understand that point, you need to take internal or external help. The judgment process requires you to make an assessment. Are you capable to check that information, or do you need help? When I say internal, means it could be, accessing the tax expert in your firm, or it could be getting in touch with an actuary, let's say outside actuary, to help with the actual valuation. It could be any of these points. So you must make a conclusion that I need help. I can't audit this area. I need help. Okay, this is very clear. Avoid all the common biases. We'll talk about biases in the next slide. What is the bias? Okay, so in professional judgment, you need to document you are not biased, because management will say, we have been doing the same thing for years. That's why we have done the same thing this year. This is not the right answer, right? And you document properly everything that you evaluated and checked. Coming to the mindset, I think we've talked enough of this. Your knowledge and mindset has to be very rich to do a proper judgment. So you need the technical knowledge. You need, when I say technical knowledge, accounting standards knowledge, of course, some knowledge of the valuation techniques. You need that knowledge. Then only you can evaluate that area, right? You need to critically evaluate it, and you should have knowledge of the client's business. Most important. Not knowing the client's business and knowing what is right in that business will put you in a big disadvantage. You cannot just have knowledge of, let's say, uh, um, let's say let's say it's an oil business. You should have some knowledge of that business. You cannot apply a trading knowledge to an oil company production and say that the is the same. I did the audit in the same way. It does not work that way. The knowledge of the client business will help you to decide whether you made a right judgment or not. Okay. Okay. So I mean, since we took a example of an oil business, right? So like if you're doing impairment in an oil company of the oil well, is a very different point. They need to provide for restoration. They need to, fit the life of it. They need to see how much oil will come out. It's a more complicated process rather than the uh, impairment of a simple manufacturing business of a food item, right? That is much more easier compared to an oil business, like an oil producing company. So you should know your client's business, and that helps you make the right decision on the judgment. And the right judgment would be, coming back to the example, whether he did the impairment properly, whether he has done the valuation properly. This all this knowledge has to come together, all has to be documented. Then only you can tell the regulator or on the file that you have done a proper uh, judgment of the area and the audit and taken a decision. Okay. Anyway, I've already explained how the steps are to make a professional judgment in an audit area. Yeah, we spoke about the skills required. And I talked about the mindset that you need. Okay. Being skeptical, I mean, when I talk about biases, this is something on a psychological level we will talk now. You want to be skeptical, but there is a bias that takes place in every human being, okay, and in auditing field as well. When we go to client, we are biased, and I'll tell you what is the common biases that happen, and this is what listed out here. So one is a bias is called a mind's obvious choice, as I've called it. There is our reasoning is affected by our motivation and the preferences. The tendency to see what you want to see by ignoring information contrary to your preference and focusing on information that conforms to your preference. We tend to rely on information given rather than what is not given. Okay. Now, let's say you are always used to, let's say, written down value of depreciation method. Okay. So it becomes your mind's choice that this is the right way. Every client does it this way. So this client also should do WDV method only. This is the right method for him. Okay. And very, very common in valuation also. Okay. So our mind, because we have done so many audits like this, we want to do that only in the next client. We don't want to see another working. We don't want to see another angle. We don't want to see a technical analysis of his of the client's expert that no depreciation should be in a different way, because our mind has become very used to no, it should be WDV. That's it. This kind of thinking, we don't want to go to another one because we are very comfortable and we are very used to this way of looking at the data. So that is one psychological thing we need to break. When we go to client, we should be independent. We should be open to any procedures and then evaluate it objectively. Yes, this can also be right. This can also be right. Let's check it. Okay. Overconfidence. Underestimating the uncertainty that exists in a given setting can lead to underinvestment in judgment process. Okay. We believe it unnecessary to revisit the settled matters. Okay. This is very common. If we have looked at one area last year, okay, this year we decide that we have seen it is the same. Let's go ahead. We are very confident that last year what decision we made and what situation was last year, same situation as this year. I don't have to go in again. Everything is fine. Yes, we have that additional knowledge from last year. Yes, we did a good job last year. Agree. But you must tell your mind, look at it once again this year. Don't be overconfident. Last year it was this way. Going forward also everything is fine. Go ahead. No. Don't allow your mind to, overpower your rational thinking. That confidence. Don't get overconfident. Go back. Check once again. Make a reasonable inquiry again. Maybe something has changed. Maybe you are not seeing something, or maybe you missed seeing something last year. It's possible. It's very much possible. Maybe you or your team did not see something last year that is there this year to see in that area. But because you are so confident that last year nothing was there in this area, there was no fraud, no error. So this year also there is no fraud, no error. So this bias should go away. That is, you are skeptical. Okay. Availability bias. Next one, availability bias means what information is available. I more like to rely on that information rather than the information that is not available and could be something else. Okay. So many times happens if client gives you one document, he says this is the supporting for this, let's say, transaction. You see it is a let's say it is an invoice, okay, but and it is certainly explaining the transaction, but there should have been more details, okay, but more details are not there. Those other documents are not in front of you, okay. So let's say client takes some time, he's trying to get the data, he doesn't get it, he said this is what is there, it is sufficient, just read it, it is all proper, you know, and you get a feeling, acha, now document is there now, so what's the problem, let's go ahead, at least it is there, it is saying something, okay. So mind automatically says, you know, okay, client has given me something, no, so fine, I should go ahead, I mean, let me rely on him, you know, this document is looking good, but you have not seen there could be some other document which is contrary to this. And I've practically seen it also. We think that this document is very nice. I mean, let's say we asked for 3 reports. We have received only 1. Okay. And it is so well written, everything. And you are very much feel like, you know, relying on it. Ki, yaar, it's looking good. But you had asked for 3 documents. He has given only 1. Okay. It's possible that in the other 2 documents that you asked, like very um, you know, very common in case of, like, you know, agreements. Okay. One is a summary page, one is a detailed agreement. Okay. One is the sanction letter. Let's say you've asked for all the documents, sanction letter, the agreement, and the summary. So he's just given you a small summary and he's saying, see, this is it. I can't find the other documents. Possible that the real agreement, the major agreement, has additional clauses which could turn around your entire interest calculation on the loan, or the collateral points or the bank guarantee points. You didn't get that document. Okay? You didn't get the sanction letter which has all the basis on why the loan has been approved for him. You just got a summary. Summary says, okay, loan approved for purchase of fixed assets. Okay. You want to rely on it. The detail would have been in the agreement. There you would find more detail, which fixed assets, when, what time, why, all that is in the major document there, that other document. But because you don't, that is not available, a summary is available, summary is signed, authorized, it doesn't have too much information, but it has some information. You feel like relying on it. Okay. That is human psychology. So we should be skeptical, take a step back. Are you sure? Ask yourself, are you sure with this information which is available? Are you really comfortable giving taking a judgment, or you want to wait and get that other information also, get the other evidence also, without which you don't want to make the decision? So this is the bias you need to fight in the mind and get clear. Okay. Okay. Next is anchoring. This is also very common. We have a fixed point starting for a reasoning process, and we are too reluctant to move far from that, even in the light of the new information update. This also requires a very open mind. Okay. So, very example, you are working in a particular area, you thought that there is a fraud here. You have gone so deep, you have found some discrepancy, but it is not very okay. You found some discrepancy, but client is bringing lot of explanations, giving proper explanation with evidence that that is not what you are looking at, that is not the situation, there is a explanation for that, but your mind is so prejudiced that you want to stick to your point only, that no, there is a fraud here. No, client is trying to prove that he has taken all reasonable steps and he has taken that, done the transaction after careful evaluation. It is not a fraud, it is not a management bias, but you want to anchor to your point of view that no, I have found this, there is something wrong here. You must have open mind that you could also be wrong and change your opinion, looking at all the documents with the open mind. So this is the biases that come up, and this is psychology actually. There is nothing, I cannot talk about anything here on documents. It is their mind going in a particular direction. And this you need to avoid. If you avoid these biases, you are being skeptical. So being skeptical is also a psychological process. And there are things that stop you from being skeptical. And these are the biases that stop. So we need to get rid of these biases in order to be skeptical. Okay. Now I can quickly go through what are the challenges in being skeptical. So now we sit back, okay, we've understood now what is skepticism. We've understood um, how to think. We've understood what's the biases. We understood that how to make a judgment. Now, the interesting part is for the teams. When I talk about challenges, so we all know we have to have open mind. We have to have knowledge. So basically we have to have knowledge. We have to have open mind. We have to go to client. We have to analyze the information and be skeptical and then make a judgment. Right? That's what audit is all about. Right? Now I'll touch upon this the challenge in doing this, and challenge not only for you as, let's say, who are attending here are maybe partners, challenges for your managers, challenges for your juniors. Most important, they are having a very difficult time in being skeptical. First of all, they are new. I can go right down to the article training. They are having a very big challenge, and the challenge is coming up because of newness to the situation, and how and because of client also. Client also is putting the challenge. Not that there are challenges. Client is putting some challenges intentionally, not to allow your team to be skeptical. So I'll now first mention the challenges in being skeptical, and then we will talk about how to overcome the challenges. This is one of the most important parts of the session because this is where we get very practical. And I want you to see this happening and take points from your back to your teams that, okay, we need to do this. This is where we are going wrong. And we can do a better job if we overcome these challenges. Okay. So let's talk about challenges. One, impatient client. I think we all have patient clients and we have lots of impatient clients, right? How to deal with him. He wants everything now, today, tomorrow. No, don't take 2 weeks to complete the audit. Finish it in 1 week. Okay. That kind of impatient client. We are multitasking. Sometimes teams are working on more than one area, let's say 3 areas at a time, or sometimes 3 audits at a time. So the junior is under a lot of stress. He cannot be skeptical because he is multitasking. Challenge of face-to-face interview. Many people are afraid of meeting people face-to-face. When you tell them in one-to-one, what you're going to do, I will do this, I will do this, I will do this. When he goes in front of client, in front person sitting is CEO, CFO, he's not able to talk in that way to him. He's not able to talk confidently. Or let's say he wanted to discuss 5 things. He discussed only 2 things and came back. So there's a challenge. Difficulty in understanding the 100%. Many team members do not understand the client's business. Many times they don't understand the accounting standard also. And because of that lack of understanding, that area does not get the right evaluation, and you end up having last moment problem when you review the file as a partner, or that area goes under documented, let's see, under audited. Okay. The immaterial or the unauditable data. So sometimes client gives so much information that is all immaterial, or they are data that you cannot audit only, Excel sheets or in particular software formats. lack of understanding. So one is difficulty in understanding, one is the lack of understanding. People don't understand how to do the audit. Okay, I'm not talking about the business. Okay, the auditing standard. I'm talking about doing uh, how to do the audit procedure only. Reluctant to bother. Some are not bothered only to get into being skeptical in a particular area. We'll come to that later in examples. No issues last year. Most biggest reason challenge in being skeptical. In this area, last year there was no issue. This year I'll finish it in 1 hour, close. Straight take the same document, document it, close. This is one very important point. Everyone does this. No issues last year in this area. This year also there are no issues. Quickly close the audit in 2 minutes and let's go forward. Reluctant to offend. I don't want to offend the client. The junior member doesn't want to offend the client who he is auditing. Maybe it is late in the evening. He has a point he needs to discuss. That person is going home. He's angry. This is the time you're coming. Why are you coming so late with the issues? Board meeting is tomorrow, day after, next week. So you are reluctant to offend the client that you did your job, but you are coming at last moment with the issues, or you want further clarification. You don't want to bother the client. You don't want to offend the client again at last moment. Delay. If I take this point to my senior or to the client now, when board meeting is tomorrow or in 2 days, or when it is 30th September, okay, the client books closing or audit will be delayed. I don't want to delay the client. I don't want to delay my service. So I don't want to be skeptical. So I take two procedures, do it, close it, file it, close it. Very, very common in our industry. We would do less procedures and then decide we will look at this next year. Say you found something, this year there's no time, I'll look at it next year. This is not right. We should not be doing this. If there is something like this, you have to escalate it to your senior, let him work with it, let him talk to the client. There's possible for, if it's very major, there is possible for extension. And if it is not major, he will definitely get you some information or some audit evidence to close that area within the reasonable time or before the audit sign. So people are afraid that delays will happen, so they don't be skeptical. And right, same thing to say, we have exceeded the time budget. Junior feels, I was told to complete the audit in 3 days. I have not done the audit. Now, if I tell my senior that I need 1 more day, or I tell my senior I need 2 days more, he will get angry with me. He will say, you have exceeded your time budget. You are not a good performer. Right? These are the things juniors are scared of. That's why they don't want to be skeptical. Let's just do what was done last year. Let's just do a little bit more. Let's not get too deep and let's close. Unfortunately, it's happening very common in our industry. Now, how do we overcome the challenges? So here we'll talk about some methods in which you yourself or your team, you can explain them to follow these methods to overcome the challenge and become more skeptical and do a good job now as an auditor. Okay. Knowing the client. Every team member should ensure he obtains adequate knowledge about client, industry, and the person to whom in addition, and the person with whom he is going to interact for that area. So for this, you should be reading the previous year files. You should be reading his prospectus. You should be looking at the permanent file. If the team member looks at permanent file, looks at previous year file, does some Google search on the internet, about the company, its performance, about the industry, then goes to client, he is automatically skeptical. If client tries to tell him, let's say, for example, this year we had a loss, let's say it's automobile industry, this year we had a loss, he knows, I have been reading your file till today, you never had a loss. I have been reading your newspaper, I have been reading newspaper, your company reported excellent results in last quarter. How come you went and lost this quarter? This is being skeptical. You are questioning him back. Okay. Right? Now, for example, this knowledge would help you reveal a dummy company also. So if you have knowledge of the promoters, you know their names, you know the family name. When you are running through the records of the company, when you are doing the audit, when you're doing the review, let's say in the sales, you can see that this person, so and so person has done like there's been siphoning of funds because ex-employee or relative of the promoter is the debtor. See, if you read the permanent file, which is made properly first in the first place, you will learn about the bankers, debtors, creditors, related parties, major related party transactions. And because of that, when you go to client, talk to client, look at evidence the client gives, you will pick up what is happening here because you know what is the client. So this is the best place to be skeptical. I used to ensure that my team, before going to client in the office, you have to read the client file. You cannot go to client, start audit, and read file later. You have to read the file now, make your points, understand. If you have questions, ask your senior, then go to client. Do your homework. Be prepared and be sure of the facts before asking question to client. Because when you ask a question which client has already replied, we all know client says one thing very common. Last year I gave full explanation of this area. Again, this year you are asking. What answer you will give? Biggest place where skepticism is just chopped like an axe. Client says, I am not explaining again. So tell your team, read that area thoroughly. Read the working paper thoroughly. Read the explanations given thoroughly. Then go to client. Now, for example, long outstanding capital projects are there. Lots of projects are lying in CWI. Okay, if you read last year's file, you are aware of this fact, right? Now 1 year is over. You have now come this year. Now you question client, why it is in WIP. Almost 2 years are over. You can very forcefully look into his eyes and say, give me the explanation. You had said last year in the file that project will get capitalized in June. Today we are sitting 1 year after that date. Still project is not capitalized. You gave this explanation last year. Now what is the explanation this year? Client will get, oh God, I said something last year. Now I cannot make stories. You are being skeptical here. You are in command actually if you do this. Questioning of the disbursement of the huge capital advances during the times of liquidity crisis. Let's say there is COVID-19 and client is just disbursing and there's full liquidity crisis in the company and certain huge capital advances have been paid by company. If you have that knowledge, you have read the financial statement draft or you have read the file, you understand that you can question when there is no money in the company, you are having going concern issue. Why did you give huge advances out? See, if you didn't have this knowledge, he will say we had to give because business. If you understand that there's liquidity in the client, you have done the research and come, then you can directly look in his eye and ask him, why did you do this? This is where you can be skeptical. Batching the question. So juniors don't like, so many clients complain that junior comes again and again asking same question. So tell your team, make a list of your questions, batch them up, fix a time with client, finish all questions once. Don't call him every day in the evening. Mr. So-and-so, please come. I want 10 minutes. I want to ask you a question. Again, next day, please come. I need a half an hour. Again, next day, again, I need half. Batch them, call him for 1 hour, finish it. Because what will happen after calling once or twice when he shows anger, that I'm very busy, you are disturbing me. You are then reluctant to bother him. You don't want to bother him now because you feel you will offend him now, and he will complain to your senior. So This is the challenge that juniors face in being skeptical. Frequent discussions. Our team should have frequent discussion with senior management, internal auditor also, board members, including discussion with team member between themselves also on the regular basis. So talk. Talk to senior management, talk to auditor, talk to board, talk to other team members also. Don't just sit quiet. Once in a day, collect, communicate. The collective knowledge of the team, different team members, and the input from the experience of the EP, the engagement partner, can lead to a better assessment of the judgment made by the client and ability to corroborate the evidence obtained. Obviously, when you talk to team members, maybe he has done that particular area last year. Maybe he has done that particular area in another client more properly. Maybe your engagement partner has seen this particular judgment in the last year and can guide you better. Okay. So you should come together and talk. Auditing standard also requires mandates that they should be meeting with the EP and it need to be documented. So please, this is something we need to do. We are doing it. We are talking. It's not documented. Okay. Like I said, have discussion with other personnel, finance and accounts teams on occasional basis, HR, logistics, production, change in number of employees, production, locations, branches. This all knowledge helps to corroborate with the trial balance. What is there in the trial balance? Casual discussions. Sometimes our team can obtain more information on casual discussions, but doesn't mean you always have casual discussions. Very little. Sometimes go meet the client, go for lunch with him. When he talks about, see, when client is away from desk, he talks about his work, but he does not remember what he has put in the books of accounts. So he may release some information which you need to remember and go back and check in the books of accounts. He said we opened 4 factories. Books of accounts are showing only 2. And you will see this very common. So once in a while, spend some casual discussion with the client. When he talks, today, this year, bonus was very nice. We all received, let's say, could be anything, iPhone. Okay. Go back to the books. Have they recorded distribution of iPhone as a bonus or as a benefit to employees? So simple, right? Right? So that time you will understand. Then you can probe further. Where is their iPhone? Why is it not recorded in the books? Why is there no cost booked in the company? Okay. Or it could be other ways. He's saying iPhone. The company has booked expense of Samsung. So anything can happen in this audit world. So you need to, it's great. I mean, our field is great that we come to know a lot of things. There's no limit on the examples that we can quote here. Okay, coming back to the discussion. Any concern raised during the audit? So escalation to senior. This is something your junior should be told when you find an important matter, because he will think, I will complete. Then I will show my senior, see, I did good job. I thought there was a fraud in purchases. I spend 1 week and I will find the fraud and I will tell my senior. Thing is that sometimes time is not enough. And if senior helps you, you will find the thing in 2 days. Okay. So if you have a concern, team member should immediately escalate to senior or the more experienced team member or the partner also. They will immediately talk to CEO, CFO, get other evidence, get all documents fast out. Because when you start from bottom and you tell the assistant manager accounts or the manager accounts, he will say, okay, give me 3 days. I'm giving you a document. He'll give you some wrong document. He'll give you some wrong explanation. He will try to make you go round and round. But if manager or partner talks on top to the board of directors, something has been found, we need this detail immediately. Then see how fast things move. And correct evidence will be brought out immediately or very fast. So juniors should escalate to seniors. Don't waste time, because you can't be skeptical by just keeping things to yourself. You need to talk. We need to push it in the right place. You need to push the right buttons to get the right information from the client. Similar, extending the previous example, knowledge of all demand on tax demands and all these all need to be talked with top management, CFO. They are the ones who will give you the right status, the right information. Pushing from down sometimes does not help. keep more than one team member involved in the discussions, because sometimes one junior is reluctant or not confident to discuss with the client. Send two people with him in one area. Tell him, take this person along with you in the meeting. So if one person forgets a point, the other person remembers the point. It's okay, and he can question the all assumptions made by the management. As we said, trust but verify. Audit team should trust the evidence, but he should or definitely verify the evidence. Okay. As a similar example I explained earlier. Now I'll one nice example of external confirmation of skepticism. We call for confirmation from the client. Client is in Delhi. Okay. There is a Mumbai customer. We call for custom confirmation from Mumbai debtor. Okay. When we received the envelope had the stamp of the Mumbai of the Delhi post office. Okay. Now, if customer is in Mumbai, post should come from Mumbai post office, but post has come from Delhi post office. Very clear. Client is posting the confirmation, not the customer. Right? So, and this is very common. You won't believe this is very common. When the minute we trouble the client, no confirmation is not coming, he goes to post office and posts the confirmation himself only. Okay. Definitely it is fraud. Okay. Fraudulent. Similarly, in one discussion, we learned that the manufacturing location is closed. Then we tried to compare that with the rent receipts, electricity payments, production reports, and saw that that is all happening. But, the particular location is actually closed, but their rent is going, electricity is going. So we can question the client. Or if you are saying it is closed, then how come these payments are being made for that location? Ask probing and open-minded questions. Okay, for example, instead of asking did you capitalize project A and project B, which is evident from the financial statement, you should ask the status of all the projects. So don't tell client, tell me status of project A and B. Give me list of all projects. Then you compare, has he disclosed all the projects? What is the status? What is the outstanding? Okay. How did you manage the business inventory during lockdowns? How did the competitors fare during the same period? See, if all your competitors are in losses and you are in profit, something is wrong, right? Because normally industry impact is faced with all companies. You can use bank confirmations to check more information like interest costs, terms, bank guarantees, okay, unquoted investments. Okay. The other part is debtors and manual representation that we can take. These all can be verified from the legal standing of the companies or the liquidity status. So when there are unquoted investments, we need further information about that company. If that company is in liquidity problems, okay, then definitely that unquoted investment need to be impaired. You can call for the financial statement. If it is not audited, you'll get a draft. You'll get a previous year financial statement. You need to make a judgment after looking at that. Let's say for an unquoted investment, what to do with that balance? Is it really recoverable? Is the question. The last point, very interesting. If you are not confident with the management explanation, when I say management means CFO or below, they are giving explanation, you are not confident. Just ask them, please get this explanation signed by your senior management and give me representation. Just say once. Asha, you are telling now this is the reason for this matter. Tell your management to sign, make a representation, please sign and give me. Finish. That guy will not come back. He will not give you a representation. So when he refuses the representation, or the representation will have something else only. This is very common. Okay, very common. Because senior will not write wrong. That person explained to you may made story and story and story. But when you have to put in writing and the senior has to sign it, he will make sure he's signing the right thing. So this is a very interesting way of being skeptical and getting the right answers. Okay, we should properly monitor, plan the audit and timing of the procedures and monitor the work of the junior team on continuous basis. Team should update the technical knowledge and skill on the regular basis. Definitely, the more knowledgeable you are, the more skills you have, the more skeptical you will be. Unpredictability, auditing should also involve some unpredictability in audit procedure. Surprise cash count, physical verification, or confirmation processes during the year also you can do. So these will help you to be more skeptical because you get some information, knowledge during the year itself. Now, so that I'll just quickly brush through some ways in which you can be, skeptical and overcome the skeptical issues. So if you do this, definitely we are doing a better audit, and team also will be comfortable. Team also gets in the flow of doing it properly rather than being afraid of client, being afraid of last day, being afraid of not documenting. Okay. Now, this is the quick slide that talks about fraud and professional skepticism. So SA 240 is the standard that deals with our responsibility in the fraud. Okay. There is special emphasis on professional skepticism, and it requires the auditor to investigate where you find the conditions that you doubt the document or the misstatement. Okay. That I earlier said also, right? In case of you having a doubt, especially with regard to a fraud, your skepticism has to step into place. You have to be skeptical whether the information, that evidence that you have obtained from the auditor and the information you get from the client, sorry, does it suggest of a misstatement due to fraud? Okay, so you have to be skeptical on this in all matters, including you have to consider the reliability of the information to be used as the audit evidence and the control over its preparation and maintenance where relevant. So this we are talking about checking the information produced by the entity. Now, as you all are aware, 240 requires us to not only check the audit evidence which the client gives. Let's say it's a debtor aging. Okay. We are looking at the debtor aging to understand, let's say, the provision for doubtful debts. But we also need to check the debtor aging from where the report has come, whether that report is reliable, whether that data bank or the debtor's master from where the data has been extracted, the aging has been extracted. We need to verify that also. And we should be confident that that data is also genuine and appropriate and adequate. Okay. It should not be that it has been tampered with. Okay. So you need to first audit that entire process, that data first, the master data, the debtor master data, and the process of taking out the aging. You need to audit that also to make sure that it is proper and complete. The full all data was properly recognized. The aging is properly calculated. And then in that also, you need to see whether there is any indication of fraud. So just clarifying that. Audit evidence also we need to check, and the information produced by the entity from where the audit evidence is coming, that also need to be checked for fraud. We need to be skeptical. Now, as you know, SA 240 is very elaborate. And that is the reason now we have something called as a risk-based audit, right? The risk-based audit itself is based on the pretense that we have to identify all the audit procedures. We have to identify risk in the financial statement areas and the particular transactions on the area and inside the transactions. We need to find the risk of material misstatement and then plan procedures to mitigate that risk. So SA 240 is very clear. In the planning stage itself, we need to assess the risk of material misstatement due to fraud and then design the audit procedures. Okay. 240 requires us to make presumptions about the risk of fraud, assessment of risk of material misstatement, or specify the procedures that are required to be performed. For example, the required presumption. There is a presumed risk as per SA 240, fraud risk of fraud in revenue recognition, and risk of override of management override of control, it's called. These are two assumed, presumed risk by auditing standards mandatory. Okay, where we have to do professional skepticism, plan the audit procedures, and mitigate the risk of fraud for these two areas in every client that we have. Okay, revenue fraud, revenue fraud, and management's override of control, because they can override the books. Correct? They can make you pass entries, right? So they can make the accountant pass entries. They can pass entry themselves. They have master control, right? They have overall control on the books of accounts, right? And the accounting software. That's what. So this is where professor skepticism has to come into play in the audit, and we need to document how we applied the skepticism, what procedures we did, and now that there is no risk of fraud, it can be more than this also, but these two for sure, and then only the audit can close and the planning is complete, and then you can plan. Like, okay. Finally, coming to the point that documentation is most important. All skepticism said and done has no meaning if it is not documented. If you document, we have proof that we were skeptical. So you have to put your procedures. What did you do to be skeptical? What was the outcome? What were the challenges? How did you overcome the challenges? Finally, what was your judgment? Make notes, put them down. Okay. Audit work paper should have discussions with management, evidence, how you evaluated the evidence, how you cross-checked its validity, adequacy, appropriateness, and then close the file. If you put these additional points into any work paper to just demonstrate that I was skeptical, okay, it will speak volumes for the quality of work you have done on your audit quality. Any regulator sees a file where he sees additional input by auditor to prove that I have checked properly, I did additional thoughts, I did discussions. This is very, very impressive to an audit, to a regulator or any reviewer that says that, wow, the team has taken some steps, use their mind, open mind, and then concluded that this estimate is right or this impairment is right or whatever judgment he took. But everywhere in the file, you should demonstrate that, look, I use my brain. Basically, what I'm saying in a very simple terms, let the file just show that you have used your brain. That's it. And that's it. We are really good in being, skeptical. We just need to show it in the file. Like I said, how do we do it? We document the discussions, document the procedures. Okay. Document the risk that you identified in that area, and how did you respond to it. That's being skeptical. How did you corroborate inquiry and evidence, cross-link to the other evidence in the other area? Okay. How did you evaluate the assumptions? Put a critical evaluation of all the significant client assumptions, including analysis of the consistency with other information received from management, consistency with last year, which are the supporting documents which you have checked. How did you get assurance with respect to the accuracy and the completeness of the data that you obtain, like from wherever the reports are coming? Document how, as an auditor, we challenged the assumption, we were satisfied with the responses and the assumption. If you put all this onto a file, okay, there is no doubt that you have been skeptical. No one can raise a finger on you ever. And this is what we just need to do. Okay. Now, I'm done with speaking about skepticism, and we've covered how to document all. Why is it important? Finally, now talking about skepticism is getting more and more complex, more and more important, because our economy is growing like crazy. We've got new standards coming in. We've got new complex instruments coming in. We are now a global, in true sense, India has gone global. There is no company in India that does not do business abroad. Very few. All are now reaching various. We are crossing boundaries. We are going to countries we have never gone before. India's bilateral and partnerships with all countries have now fostered huge exports of products and services, and import also of products and services. So it's now no longer just one location audit. We are talking about global. We have to audit now global impact on balance sheet. So that's the reason skepticism going forward is very, very important. Okay. So not only auditors are being challenged on skepticism, even management, audit committee, board of directors are being questioned. Are you skeptical? Have you considered all the alternatives? Have you properly selected the accounting treatments? So when you talk about skepticism today, it is influenced by personal behavioral traits that we talked about, but it is more to do with the competence level also. So, the education that we give our teams, the training and the experience that we take, this all have to come into play when we talk about becoming skeptical. So that's why we see a lot of specialization in audits, bank audits firms are doing more bank audits, real estate firms are doing real estate audits, because the kind of experience and education you need to be skeptical there is getting more and more and more because of the laws and because of the complex arrangements and complex agreements, right? So being skeptical now requires a lot of education, which needs to become the prime focus of all auditors. That's what we're doing here also, right? Okay, so skepticism is influenced by the actions of the firm leadership and the engagement part, by the culture and the business environment of the firm. So firm has to be a learning platform for people. People should be comfortable. People should be growing in the firm. Okay, not just doing tick and tie. Okay. Auditing standards includes the requirements and the guidance designed to help create an environment at both the firm and the engagement level in which auditor can cultivate appropriate professional skepticism, which is obviously now the question being asked by regulators. That is why the AQMM, the audit quality maturity model, which is now getting upgraded again, is talks about that entire setup, the entire setup in the firm, which will promote skepticism. So that's why they talk about HR practices, they talk about training, they talk about softwares, they talk about audit tools, they talk about checklists, they talk about um, code reviews, they talk about review of the file, on a consistent basis, evaluating performance of engagement partner by reviewing their files on a cyclical basis. This all is driven to ensure that audit firms are going to be skeptical and don't slip. So the AQMM, and when we see the peer review and the QRB, all the questions that they have there for the firm and the audit file are all driven to understand skepticism and proper documentation, right? So in this world today that is changing with technology so much, it is most important that skepticism be at the forefront of all firms, okay? And we need to demonstrate this everywhere. I mean, the time has come for auditors to be that way, and I think we are at the best time in Indian history to take on that challenge, because we have all the tools, we have all the resources. It's just for us to step up a little bit and do a good job by training our teams and documenting the skepticism. Right. So I guess we've spoken a lot about skepticism today. I am done with my presentation. And I think we've covered, I hope that I was able to communicate the importance of skepticism and the steps to achieving it in the audit file. I think I've taken enough share of my time. Over to you, sir. Anil, is there?
Yeah, hi.
Hello.
Thanks.
Yeah.
Right. Thanks for the wonderful session, Alim. And it was really, really very insightful to know a lot of things about this topic, which is very relevant and very critical for every audit engagement, and I think less discussed or spoken about. So it was wonderful to have this session with you, and you emphasized on the need for professional skepticism in the way that I mean the certain parameters for required for having this skepticism is that when to have an audit evidence that contradicts with other audit evidences, or the information that brings into question the reliability of documents, responses to the inquiries to be used as audit evidence, conditions that may indicate the possibility of a fraud, or the circumstances that suggests the need for audit progress procedures in addition to those required by standard of auditing. So there are so many things you covered so comprehensively and by giving the examples. So it was very insightful. There are many questions from the participants, Alim, and I'll ask some of them which I could collate and and I'll see that what best we can, I mean, to what best extent we can cover those questions
Sure.
in this webinar. Okay, so I think one question is with respect to that there has been dispute between the directors on account of the management change, and some of the financial data was being withheld by the old directors, and now the new directors recreated that data for that period and finalized the financial statements, and new directors are now holding the majority, so they are in control of the company. So the question is that to what extent and what type of professional skepticism should be applied in these type of scenarios when we audit that company?
Okay, so interesting question.
Yeah,
Definitely it is a red flag for skepticism. Okay. I've seen such situations where previous management said something. Let's say previous board of directors now the question is what happens in such situations is that there is a time gap. Normally these audits get extended and no data flows because the previous management has probably decided to exit and they don't now want to give anything to the auditor. They say we are going, let the new people handle. So
right, right,
nothing has been received. Definitely you need to go back 1 year and then start drawing the trail.
right.
During this process, is there any red flags of fraud or miscommunication or employees resigning or something? If something like this has happened and a new management has come, now new management will give, let's say there are two stories. Now, old management gave story A. If they gave story A and they left. Now new management has come. If they are saying story A only, okay, then you don't have to work so much because they both are saying the same thing. Let's say company is going into losses, there was a fraud, okay, and so first management was out or thrown out. Second management acknowledges yes there was a fraud, that's why we threw them out. So the story remains the same. But if story is changing, now story B has come. Okay, now is the problem because earlier management said something, it is communicated to auditor, and they have gone. Now, new management is saying something new, and maybe they have drawn books again. So, each point, each area that they are talking that has now changed need to be critically evaluated. And
Okay,
if it requires investigation, there should be investigation. You need to tell management, I need full details. What was the old story? What is the new story? And what you have done about it. Only when I am convinced with all evidence of your story, then only I will support. And all that has to come on the file. Is my
right.
view.
And maybe, right, and maybe I think just to add on this, Aline, so another way, I mean, to further extend the procedures, one may, since in this case, new directors try to pull out the information to the extent available, and then they drawn up the accounts with whatever information was available with them. So I think from a audit steps perspective or of professional skepticism perspective, one should now rely on more on the external confirmations or direct procedures. For example, if they have said that debtors were that much debtors were there and this is the reduced balance of debtors, they can relate it with the bank receipts through the bank statements, verification of bank statements, or seeking the direct external confirmations from the debtors, so that it's a more corroborative evidence they have to
Yeah.
ensure that okay, whatever the books of accounts now they have drawn with the whatever limited information the new management has in place, they are also parallelly getting corroborated with the additional external confirmations or the document evidence they could get as part of the audit process, which we, though we also do that as part of the normal audit procedure as such, but then the extent of these procedures should be more robust in these type of scenarios where we know that some of the information was not available and these accounts were drawn based on the limited information. So that also will increase the extent of will increase the extent of professional skepticism in these scenarios by doing this.
Yes, yes. And I've very likely seen that they come in and change the estimates, they change the assumptions. They say, no, previous year view, that old director, he was recognizing wrong. This is the right way. They change the revenue recognition, they change the provisioning because we don't
Right,
know
right,
genuinely or not genuine. We don't know. So
correct.
it is better reporting or under over reporting. We don't know. So those areas we specifically need to go from previous year to the current assumption or the current estimate and then critically check everything and document it, that how you are now satisfied with the new management's
Statements,
explanation or whatever.
your
Yeah.
revised estimates.
Yes.
Right, right, right. Okay. The next question is that how does the professional skepticism contribute to identifying potential ethical dilemmas in financial reporting? So, how does the professional skepticism contribute to identify the potential ethical dilemmas in financial reporting?
See, one thing is for sure that if you are questioning, you are being ethical because you are not taking anything on face value. Okay. When you go be skeptical, you ask the additional questions, you document the
Question.
additional questions. Automatically, you are taking dilemma out and you are bringing fact onto the paper. Rather, not asking the question is an ethical dilemma, and you did not ask. You did not question director. You must be siding with director's view. So like they say, you are with the client. So if you start documenting that I have questioned the client, he has given this answer, I re-questioned on this, I got this evidence, I got this report, then I concluded that this estimate is correct, or this revenue recognition is proper, or this impairment or going concern assumption is proper. So automatically that dilemma goes out because now ethically you have questioned the director and you have documented. Now who can say that you did not, you are taking sides with the client, you know so it really helps actually.
Yes, yes, yeah. Then no one can challenge that you actually did not perform the adequate audit procedures
This
if
is
you keep
this
on
is the
asking the
biggest
right.
complaint. Like you've seen all NFRA reports and all, how they just blatantly say auditor was hand in glove with the client. Any many
The
reviews reports I've
management,
seen.
right, right,
They straight away say that line. Why? Because that paper is not speaking that way. That he challenged the client.
right. Even if I think most of us questions ask difficult questions or write questions from the management, but I think it's more the lacking part is that we don't document it the way it should be documented or the extent to which it is documented, which actually poses a challenge
Yeah, yeah.
later on with demonstrating the same effort what we had actually done at the time of audit to demonstrate to regulators that we actually did that work because of the
Yeah,
lack of
yeah.
adequate documentation.
Like I'll tell you one simple example, if you don't mind a minute. There was
Please.
a client who changed the revenue recognition model. Okay. Definitely, it gave a little better position to the balance sheet. Okay. Uh, when we challenged him, he said, "Okay, I will get you an accounting explanation of this revenue model and an accounting opinion also, why this is more appropriate for my industry." Okay. Now that was a 30-page opinion with a lot of depth on why this new method is better for his industry or for his setup. So see what happens. Now no one can question the ethical dilemma, why you allowed the revenue recognition policy to change,
To be
because
changed,
I have
right,
now
right.
documented that opinion and I have critically read that opinion, raised questions, got answers, and put on the file.
Yeah,
You know.
absolutely, absolutely. Perfect. And I think another maybe we'll make it the last question because of the possible. I mean, we are already exceeding the time which was allotted to us. So the question is that how to maintain professional skepticism where there are some related party transactions in the client. So, I think it's a more of a normal routine audit question that what type of professional skepticism should be applied when there are some related party transactions. So, I think one should, if I just add to this question that, it has to be a normal audit procedure, and then the one should evaluate that whether the transactions at related party are at arm's length or not. So if the company is making any of the related party transactions and they are at arm's length or they are at the same price at which the company would have made those transactions had those been done with not related parties. So that is something which we as an auditor should evaluate and understand with management by looking at that whether if a company sells a particular product to a related party, so what is the price they are charging for that product from that party, and if they are selling the same product to an unrelated party, are they charging the same price to the party, or so it should not be significantly off from what they are charging to a related party. And then the arm's length basis and benchmarking is, I think, is another way of ensuring that related party transactions are appropriately accounted for, and there are no bias benefit being given to RPTs. You can add to that, Ali.
Yes. So related party, more our focus should be on the disclosure, that whether we are disclosing everything. One is the relationship and the transactions. So that is more a general audit procedure and a deep dive search into the parties, whatever we can find, right? More we need to look at unusual advances given taken, without proper documentation. And even if they are not done at proper prices or the same prices, we need to, then that goes into a different angle, that is this harming the shareholders? Is this, having that impact? So first, our focus should be to find those transactions, take proper representation from client, look at all the agreements and stuff and names, and and how we need to disclose it for sure. So there could be transactions, they may not be at arm's length price. That's a transfer pricing and more a problem, and more a whether the business is being done in a manner prejudicial to the interest
Of the
company.
right.
That should be more our focus. And of course, we should have a rationale why they did the business at whatever prices they did it at.
Right. That's right, Alim. That's right. I think this is all questions I could ask Alim for today's session. And
I
thanks
am sorry
again.
I must have taken a lot of time, but it was a large topic actually.
Yeah.
Thank you so much, sir. It was wonderful deliberation. And of course, you said it is a large topic, but you have covered, in spite of having the bad health, you have covered all the aspects related aspects relating to this very important topic. And Kapil sir has also added his views as well as moderated in a very wonderful manner. So apart from having very busy schedule, Kapil sir has given his consent, yourself has given your consent, and hats off to you. You have spoken for full 2 hours in spite of having your bad health. So thank you so much, Aliji, for
Thank you,
wonderful deliberation and sharing your insight as well as knowledge and in-depth knowledge with all our members. Thank you so much, Aliji. Thank you so much, Kapil sir, for wonderful.
Thank you very much.
Thank you. Thank you, Anil.
Thank you.
Thanks,
Thank
Alim.
you,
And
sir.
take good
Thank
care
you,
of your
Kapil sir,
health.
and thank you, sir,
Ali.
for
Yeah.
giving me,
Thank you.
and thanks to double ASB for giving me an opportunity. I'm so
Thank
happy that I can share years of experience in a session like this. This is one place where we can definitely share. It is all practical only. Professor Skepticism is not taught in books.
Yes, yes.
Absolutely. Absolutely.
Right?
Thank you, Alim, and take care
Thank
of
you.
your health.
Thank
Yeah.
you.
Thanks,
Thank you.
Anil. Thanks.